All right, let's talk about something that could really change the way you think about investing. We're going to do a deep dive into a fund that's all about looking beyond India's borders, the Kotak Quality Overseas Fund of Funds. Think of it as a potential ticket to the global markets. Let's get right into it.
So first, let's talk about something really important, a potential blind spot that so many of us have in our portfolios. It's totally natural to stick with what we know best, right? To invest right here at home. But what if, and this is a big what if that comfort zone is actually holding us back from a much bigger opportunity?
So, just take a second and ask yourself this. Is your investment portfolio really seeing the whole picture? Or are you maybe looking at this massive, dynamic global economy through, well, a tiny keyhole?
Okay, now this right here is a number that should really make you pause. The Indian market, as incredible as its growth story is, makes up just about 3.4% of the entire global stock market. Let that sink in for a moment. That means a mind-boggling 96.6%, almost 97% of the world's investment opportunities are outside of India. That is a massive universe of companies and growth just waiting to be explored.
And that is precisely the problem that a fund like the Kotak Quality Overseas Fund is designed to solve. It's built to be a simple, straightforward gateway to that world of high-quality global companies.
So how exactly does it work? Well, it uses something called a fund of funds structure. Now, don't let the jargon scare you. The idea is actually super simple. Instead of you having to spend hours trying to pick individual global stocks, which, let's be honest, is a huge headache, this fund does the heavy lifting. It invests in another specialized fund that's already full of global stocks. It's like buying a curated basket of other baskets. See? Simple.
And here's a look at how your money makes that journey. It's a pretty clear path. You put your money into the Kotak fund. Then Kotak takes that capital and invests it into a big-time international fund, in this case, the GMO Quality Fund. And that fund is the one that actually holds all these top-tier global companies. It's just a streamlined way for you to get access to the world's markets.
But you might be wondering, why even bother? What's the real advantage here? Well, first off, you get a piece of world-class companies that you simply can't buy on the Indian exchanges. It's also a fantastic way to lower your overall risk. You're not putting all your eggs in one country's economic basket, You're spreading it out. Plus, it can act as a shield against a fluctuating rupee and lets you tap into massive global trends, from AI to biotechnology and beyond.
So where in the world does your money actually go? As you can see, the biggest slice of the pie by far is the United States, at 76%. But it's also got solid exposure to developed markets in Europe, like the UK, France, and Germany, and even key tech hubs in Asia like Taiwan. This isn't just throwing darts at a map. It's a deliberate strategy to be in some of the world's most powerful economic engines.
Okay, now let's get into the real secret sauce of this fund strategy. It's not just about going global for the sake of it. It's about going global with a very specific theme in mind: quality. But what does that word even mean when we're talking about investing?
This quote just nails it. In uncertain markets, discipline matters more than ever. We all feel that uncertainty, right? The markets can be pretty choppy. In times like these, you don't really want to be gambling. You want to own solid, resilient businesses that can weather the storm. And that's the whole idea behind a quality strategy.
So let's break down this idea of quality into 3 simple pillars. First up, high profitability. This means the fund is actively looking for companies that are just really, really good at making money. Businesses that consistently generate high returns on their capital. It's a classic sign of a well-run, efficient company.
The second pillar is a strong balance sheet. Think of this like a company's financial health report. The fund wants to invest in businesses that aren't drowning in debt. These are the kinds of companies that can survive an economic downturn without panicking. They're literally built to last.
And the third and final pillar: stable growth. Now, this isn't about chasing the hot stock of the week that might crash tomorrow. No way. This is about identifying companies with a proven track record of consistent, reliable earnings and cash flow year after year. These are businesses with a durable competitive advantage that just lets them grow steadily over time.
So, the theory sounds pretty solid, right? Go global and focus on quality. But the billion-dollar question is always the same. Does it actually work in the real world? Let's take a look at the track record of the underlying fund that this Kotak fund invests in.
And here's the proof in the pudding. Look at this. Whether you look at a 3-year, 5-year, or even a 10-year period, this quality-focused strategy has consistently delivered better returns than the broader world market index. That's not just a lucky streak. That's a pattern that shows, over the long term, this focus on quality has really paid off.
And who are these quality companies driving that performance? Well, they're names you absolutely know. We're talking about the titans of industry: Microsoft, Google's parent Alphabet, Apple, and Johnson & Johnson. These aren't just companies, they are global powerhouses. And this fund gives you a way to own a piece of them, which is pretty incredible.
Okay, now for the really important reality check. No investment is a sure thing, and it's absolutely crucial that we talk about the risks. Because when you're investing internationally, you're playing in a different arena with its own unique set of challenges.
And let's not sugarcoat it. The fund's own official riskometer puts it right there at the top. Very high risk. That's because you're investing in stocks, and global stocks can be volatile. So let me be crystal clear. This is not a fund for your emergency savings or for money you're going to need in 6 months. This is for the long game.
So what are these risks exactly? Well, first, there's currency risk. If the rupee gets stronger against the US dollar, for example, that can actually reduce your returns. Second, global market volatility. If Wall Street or European markets have a bad spell, this fund is going to feel it. Third, you got to look at the costs. Because it's a fund of funds, you're essentially paying the management fees for both funds. And finally, remember that the government sets limits on overseas investing, and sometimes those limits can get paused, affecting new investments.
So, after looking at all of this, the huge global opportunity, the sharp focus on quality, the strong performance, and of course, the very real risks, we've come to the single most important question: who is this fund actually for?
This chart breaks it down perfectly. This fund is likely a great fit for you if you're investing for the long haul. Think 5 years or even longer. You need to be comfortable with a higher level of risk, and your main goal should be to add that global diversification to your portfolio. On the flip side, if you have short-term goals, if market swings make you anxious, or if you prefer to stick only to Indian investments, this probably isn't the right choice for you, and that's totally fine.
At the end of the day, investing only in our home market is like exploring just one small, familiar corner of a giant, exciting world map. A fund like this offers one way to broaden your horizons and see what else is out there. So, the question I'll leave you with is this: now that you can see the whole map, where will your investments take you?